Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I have a new buy recommendation for you this evening. It's been an interesting day. Just got done with a sound bath, which was excellent, and got a new pickleball paddle, the most powerful pickleball paddle as far as pop and power. It's called the RPM Q2, and I'm looking forward to trying that soon. But I did want to get this out to you. So, right now we have one, two, three, four, five, six buy recommendations. Antero Resources, uh, the iShares Commodity Index, that's high 70% energy. Those did extremely well today. Uh, Brazil EWZ, that's done extremely well for us since the initiation of that, breaking out of a 7-year base. MP Resources, I just initiated on that a couple days ago. It's pretty much flat. That's rare earth minerals. I think that's going to be the next with all the war and things going on. People are going to hoard things like energy, like minerals, rare earth minerals. Uh, also, the aggressive pick here is GameStop, GME, and India is the last. My only emerging markets left, and it's down probably, I don't know, 5% or so, hanging on there by a thread. But anyway, I wanted to initiate on this today. Just real quick, I know I ramble here, but I think it's good information. Uh, back 2 years ago, got bullish on metals. They did extremely well. Then people really were kind of euphoric about it. Of course, it crashed here recently, and I had shifted in like October, November to energy and oil, and recently more natural gas, kind of overweighting natural gas now over oil after it had the big spike the other day. I think energy is getting to be crowded. I'm not ready to get out of that yet, but the reward to risk is no longer as attractive since prices are so high and it's what vertical and you got really high volatility. So I expect to be transitioning to metals again in the next couple of weeks as they lose some of the investor focus and people are kind of giving up on them a little bit. So, um, but today is going to be on something totally different. I'm initiating with a buy recommendation on the Technology Spider ETF, symbol XLK. It's been a while since I've been involved in technology as far as a recommendation. This is not a long-term recommendation. This is a trade. We're in a trading market. We've been in that market for probably 3, 4 months. And so when I see something I can take advantage of, I try to do that. So let's get into it. Hopefully, we all can make money on this. So XLK, these are the top 10 holdings, and this is a very concentrated ETF, which I actually like. Normally, the top 10 holdings might make up 25% of the fund, the ETF. And here you got big weightings, 15% in NVIDIA. It could be good or bad. It's got to go up for it to be good, these stocks. Apple, 13%, Microsoft, 10%, Broadcom, 5%. Now we're getting into chip makers. We got Micron Technology, Broadcom, of course, Advanced AMD, Advanced Micro Devices, Palantir, Cisco, which I don't think is really a chip maker, but they've been around a long time. Lam Research and Oracle, so software companies. So it's very concentrated here. So you're making a big high conviction bet on large cap tech. Again, this is a trade. This is not a long-term recommendation. It could dwarf into more than what I think it is now. Sector focus, almost entirely technology focus with 42% in semiconductors and 25% in software. So This is the daily chart. Normally I start with a weekly chart and then I show the weekly chart going back like 3 years and then the daily going back 6, 7 months. But I'm going to start with this because it's a shorter term trade that we're looking at. And you can see this consolidation. So if you can imagine for the year prior to this, kind of an straight up move in technology. And this green line is the 250, excuse me, daily exponential moving average. I don't use a 200, I use a 250. I use exponential instead of simple moving averages because they're quicker. And you can see how far away this peak was from our moving average. And the moving average represents the mean, and eventually everything reverts to the mean. So when you see something really far away from that, you don't want to really be chasing it there. But you can see how this is flattened out after this big up move, and that's a sign of strength. It's corrected sideways, not down. And so, I look at this, or other market technicians would look at this and they'd say, nothing there. It's just consolidating, not really, giving me a great entrance point. But I'm going to drill down on this and we're going to look at this part right here, um, and see if we can't get a leg up. I don't like, most technicians are going to buy this breakout. And usually, the longer this consolidates, the bigger the breakout is going to be. And it could be up 10% in one day, and then you're chasing it. I don't buy on green, I buy on red. I buy when things have a down day, and I sell when it has an up day. I sell some. So, we're going to take a look at this and see if we can get a leg up on everybody else that's watching this. And here we go. This is a descending triangle. It's a small thing. It's like 6 weeks. So, uh, they're not as sound bath. They are not as reliable as a 3 year chart, or like Brazil, a 7 year chart. But again, this is a trade. And if prices can break out of here on a clean basis, you measure the base of this and you project it upward and you get 155, which is 10% upside from here. But if it goes up 10%, it would break us out of this, and then we'd measure the base of this and we'd project that up. But anyway, I'm not overly bullish on the market right now. Uh, this is the first step, and we'll see what happens. What I like about buying this right now is my stop is at 139. If it breaks all these lows here, it could go all the way down to 135, which would be support. I don't want to hold it because the market looks pretty crummy. Um, but if it holds and it goes higher, your reward to risk is like 15 to 1, which is, really good. So hopefully it's not up a lot tomorrow, because if it's not, I would recommend buying this. And uh, and I would do this intraday, but there's not enough people that really watch that. I don't know that that's my audience. I don't only have 205 subscribers, so it's not, really worth me sitting by the computer all day. So that's the recommendation here, is to buy this point and figure chart. Um, this looks like a consolidation, but you do have to realize that the row of O's or zeros broke the prior low. And so we have a bearish price projection of 122. I'm really not that concerned about this, because, except for the market, makes me concerned. But this looks like a consolidation to me, just like we saw on the prior chart of the consolidation. So I just wanted to show that we have a bullish trend line in place, of course. So thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell everybody, please. And I think the recommendations have been great. Well, not great. They've been really solid. And have a great evening. Good trading to you tomorrow. Adios.